I'm going to go into the more interesting part, perhaps for some of you, which is the State of Union of Equinox Gold and our very ambitious plans to build ourselves into a world-class gold mining company focused on the Americas. In the very first, so is stuff up now, Ron? People are able to see this. So on our website, I'm going to be walking you through some slides that are up on our website, and I hope you're able to follow with me. The very first page is our cautionary note, and you'll notice a lot of fine print there that says, "Nothing I say is to be believed." It's anything that's forward-looking. It has a lot of caveats in it, and you should have a look at that to understand that. So today we reappointed all of the board of directors you see on page 3 here. It's a very strong board, very experienced board. I'm very happy to work with everybody here. They all contribute greatly on our committees, and I want to extend my thanks to each and every one of them for their part in building Equinox Gold as quickly as we've built it so far, and as strongly as we have right now, with such great prospects for the future. And I'm just going to go through on page 4, where we've come from and where we're going. It'll kind of inform where we're going. We've been one of the fastest growing gold companies in the world. We started our business at the beginning of 2018. We had one mine one gold deposit in Brazil, Arizona. We had another one in California, Castle Mountain. And we had ambitious plans to build ourselves from nothing into a significant operating company. This is much easier said than done, but we've done it. The very first thing we did is we started construction of our Brazil mine, the Arizona mine. We started and completed work on a pre-feasibility study for Castle Mountain, both very positive. We spun out a non-core copper asset to Equinox shareholders, which was then named Solaris Capital and put under the management of Richard Warwick and his team at Augusta. And then to be an operating business in our first year, we went out and acquired the Mesquite mine. Mesquite was a big low-grade heap leach mine in Southern California, or is. It had a very short life when we bought it. We paid $150 million, give or take, to buy that, and we've made that back and significantly on top of that, and yet we have a longer reserve life today than we had when we bought the mine 4 years ago. So Mesquite's been an absolutely fabulous asset for us, a very, very successful transaction. We produced 25,000 ounces in 2018 based on that one partial year at the Mesquite mine. In 2019, we added a very important investor, Mubadala, a big Abu Dhabi sovereign wealth fund, to our shareholder base, and they were very instrumental in financing us for the early stages of the company's life through a convertible debenture in 2019 and another one in 2020 to support our growth. We increased our Mesquite reserves. We listed on the U.S., graduated to the TSX main board, and then at the end of the year, we announced the acquisition of Leah Gold, which brought us 4 operating mines and a large development project, 3 mines in Brazil, 1 in Mexico, and a development project in Brazil. We produced 201,000 ounces in 2019. And then in 2020, we digested the Leah Gold acquisition, sold one of the smaller mines, Pilar, and because of our scale, very rapid scale, we were added to all of the gold indexes, the GDX, GDXJ, TSX indexes. Arizona came into production. Mesquite continued its reserve life expansion. That was very successful. And we started, at the end of the year, we started construction of, then we built our Castle Mountain Phase 1 mine, started operation in 2020 of that mine. And then started construction in Brazil of the Santa Luz mine, and then at the end of the year announced acquisition of Premier Gold. What we did with Premier Gold, or why we did Premier Gold, as many of you will recall, is to add scale and add a very large gold development project in Canada, very good jurisdiction, that would offset or balance the other 3 jurisdictions we have, Brazil, Mexico, and the United States. And that asset, Greenstone, is going to become the core flagship asset of Equinox Gold when it's completed in a year or so. So that was a very significant transaction. It also brought with it a smallish mine in Mexico, And we, again, have been trying to improve the quality of our portfolio, the size of the mines we have, and the Mercedes mine that we got with Premier Gold didn't fit our portfolio, and so we sold that, and that transaction just closed in April this year, just a month ago. In the meantime, with that transaction, we also became a material 30% or 25% or 30% of I-80.
26%.
26% shareholders of I-80, a brand new gold company focused on Nevada, run by Ewan Downey, the former CEO of Premier that we bought. And we watched the great success Richard Warwick and his team have had in Ecuador with the Warintza gold copper development within Solaris Copper. So it's been all of those transactions have been very wealth creating, very satisfying to watch. So in 2021, what did we do last year? Well, we began construction of Greenstone. We took a few months to kind of digest it and make sure the team was in place. We increased our interest from 50% to 60%. We have a great partnership there with Orion. And so that is now a very major construction project, and I'll talk a little bit more about that in a few minutes. We completed a feasibility study for Castle Mountain. We've moved that from feasibility now into permitting, which, again, I'll talk a little bit about that to come. We've done a lot more work at Aurizona in Brazil, where we've defined a very large upside from additional open pit targets, but also a very large underground deposit below the open pit that will be mined in future years. We've strengthened our balance sheet. We've done a lot of team building as well. We've really fleshed out our overall team. I think we have 7,000 employees now in Equinox Gold, and you can understand that when you realize also that after only sort of 3.5 years, or say 4 years of development as a company, we surpassed we had more than $1 billion US in revenues in 2021. So it was a big year on the operations side, and none of that happens without building a really, really strong team. The other thing that we did in the last couple of years is we boosted our environmental, social, and governance protocols and reporting. And this is a really important thing that I'm super proud of what we've done. And I'll talk a little bit more about that in a couple of minutes. But we've been really beefing up the attention we give to the environmental, social, and governance matters company-wide, across the platform, in every mine, in every location. So it's been a really, really busy 4 years. Our team is strong. Our board is strong. And I think on page 5, moving to page 5, what is important to me is it hasn't been growth just for growth's sake, but it's been growth per share. We've actually created wealth to shareholders' account on a per share basis. You can see this on the left-hand side of that. Our reserves have increased per share, and our resources have increased per share. Today we have about 30 million ounces of gold reserves and resources, 30 million. That gives us fabulous leverage to higher gold prices on a long-term basis as we execute operating mines that will take those reserves and resources and actually move them towards production. On a cash flow, growth in operating cash flow per share, again, very satisfying growth since we started in 2018. And you can see those numbers here in green in the middle table. And then on a production growth per share, once again, significant increase, but what I really want to highlight here is the growth that is yet to come. So we're just midstream now in where we are as a growth company. We're midstream where we have a ton of internal growth, and I'll talk a little bit more about that, a ton of internal growth. And as we execute these growth plans, our operating cost per ounce of gold produced should go down, our financial returns should go up, and all of our metrics will get better. And that's really why we're growing, trying to build scale, satisfy market needs for scale right now, and actually drive our operating costs down and increase all the good things that come from having a larger, more diversified mining company. Page 6 is just a little snapshot of the 6 operating mines we have today. Mesquite in California, again, produced about 130,000 ounces. These are our guidance for 2022. We expect it's going to produce 120,000 to 130,000 ounces this year. Quarter 1 was a very weak quarter, following a blowout quarter in Q4 last year. And I really want to emphasize to our shareholders that you cannot judge a gold mining company on a quarterly basis. You can't judge any mining company quarter to quarter. You've got to look at a longer-term timeline because things happen in this business. It's a risky business. Weather happens, things break, operating challenges happen, or you move into lower grade areas in an ordinary mining sequence, or you have higher stripping ratios which increase your costs on a short-term basis. You've just got to look at a longer-term timeline than a quarter-by-quarter review. And I think today's reaction in the market, which vexes me a lot, is really a reflection of that. Just watch how we do in the balance of 2022. You will see much, much better results, almost certainly, unless we have more, unforeseen events happen. We should have a much better year to come, and that's exactly what we guided when we put our guidance early this year. We guided that we were going to have a weak Q1, a better Q2, and much better second half of 2022, where we will produce 60% of our ounces in the second half and 85% of our cash flow. And that's the thing for our shareholders to remember. Q1 was guided to be weak. It was weak. It shouldn't justify the kind of knee-jerk reaction we saw in our market today. Okay, then in Castle Mountain, that's a mine just up the road from Mesquite. It's a real nice unit. We have very, very similar operating conditions there. They're both large, low-grade heap leach mines. Castle Mountain's run right now is a small-scale mine, but the real big expansion is going to come when we get permitted for the larger operation there that will allow that to run on a long-term basis at a much lower cash cost than it currently operates at. Farther south in Mexico, the Los Filos mine, a world-class deposit in a fairly challenging social environment, and we saw some of those challenges in 2020, shortly after we concluded our transaction with Leagold, and those challenges continued in 2021. And I think it was when was it, August or September? The last social disruption ended. Since then, it's been a fairly smooth operation. The mine's running well right now, and we hope that that's going to continue for the foreseeable future. We've done a lot more community work. We hope that the community now understands who we are. We have more confidence, more trust, and that's a reciprocal positive relationship. So Los Filos is a core asset of ours, and it's got plenty of growth potential. But at the current guidance, it's going to run between 160,000 to 180,000 ounces per year of production. Aurizona down in Brazil. 3 mines in Brazil: Aurizona, Fazenda, and RDM. Aurizona is a big open pit mine. It's run really well. It's made us a ton of money. We've paid off our capital costs twice over, I think now. So it's been a very profitable mine for us over the last 2 years since we opened it up. Again, Q1 was a weak quarter. Shouldn't be like that the rest of the year. On target for about 120,000, 130,000 ounces of gold per year. Just like other places in Brazil, the first quarter of every year is the middle of the rainy season. The rainy season really hammers production, but we get that back when the dry season comes along later in the year, and we expect this year will be exactly like last year when that identical thing happened. And then smaller mines at Fazenda. What is interesting about Fazenda is that it's right in a belt called the Bahia Belt, very close to our new Santa Luz mine, such that they're going to run kind of like Mesquite and Castle Mountain do, as a unit where there's plenty of synergies. So Fazenda and our new Santa Luz mine are very close to each other in Bahia State. Lots of upside there. They've been running for a long time. Each of those mines, well, especially Fazenda, has been running for 30 or 40 years, and we expect it's got a long life ahead of it. So our guidance this year is for 60,000 to 65,000 ounces from Fazenda, and about the same from Santa Luz once it's up and running fully later in Q2. And then at RDM, RDM's been a frustrating mine. It should produce more than it has, and it should do better than it has, but we've been bedeviled by some shifting sands in the regulatory environment in Brazil and in that specific area. Minas Gerais is the state that RDM is in, and so we've been having some difficulties doing what we've done for years and years in recent years, permitting and having approved permits to increase the tailings dams. And this year we ran into some problems with the regulators, and it's probably, I hope at least, just a kind of a bureaucracy issue. We're hard at work on this. We've flagged today in our news about our quarter that if we cannot resolve problems, we may have to shut the mine down for a while. We're hoping that won't happen, but that's the only thing that's stopping that thing from hitting guidance. The mine otherwise is doing well. So those are the operating mines. We're full of growth. We have 5 big growth projects in the company. The 2 biggest right now are getting our Santa Luz mine, up and running properly. We did our first gold pour, and I'll say, just to put Santa Luz in context, Santa Luz is the 3rd mine that Equinox has built in the last 3 years. So we built 1 mine a year. Each one of those mines, Arizona and then Castle Mountain and now Santa Luz, each one of those mines has been built on time, on budget, and Santa Luz was no exception. Our budget was about $100 million. We forecast, a year ago when we started construction, we'd be pouring gold by the end of Q1, and we hit that target, and our budget was $100 million. Notwithstanding COVID, notwithstanding inflationary pressures. So, let not the gold analyst community say that inflationary pressures necessarily mean capital costs will blow out of budget. They don't always, and we're a poster child for that through Santa Luz. So we're commissioning it right now. It's going to be a nice long life mine. We're very excited about it. It's also a very not unique, but it's using a technology that's really world class. It's really leading edge. We're using
the resin.
Sorry, we're using resin rather than cyanide to leach the gold from the rock. And this is something we hopefully will be very proud of showing as a poster child for operations that require that technology as opposed to cyanide. So anyway, that's under commissioning. Our forecast this year, 70 to 90,000 ounces of gold, and then on an annual basis, about 100,000 ounces long term. Santa Luz, happy story. And then in Greenstone, this is something I have to dwell on a bit. Greenstone is this great big development project we acquired from Premier. We got construction going last September, October. We had a groundbreaking ceremony. We've got fantastic social relations with 5 First Nations communities. Lots of support from government, lots of support from the local community. It's a great big ore body. It's going to produce about 400,000 ounces a year for the first 5 years. It'll be Canada's 4th largest gold mine. So it's a big deposit, low cost, long life, everything you want in a gold deposit. The problem is it's not in production today. It's under construction, and our budget for this was $1.1 billion US.
1.23.
1.23. I beg your pardon. 1.23 billion US. When we announced construction last October, there's a lot of nervousness by investors about big Canadian gold mine development projects because there's been a number of companies that have fallen on their face and had big capital blowouts and construction schedule delays. COVID didn't help any of this, but it's a reality. And we have had to fight that wall of doubt that we're continuing to fight, especially today, because yesterday IAMGOLD put out a rather disastrous announcement that their Côté project in Ontario has had big construction cost increases and schedule delays. And I think investors are just tarring us with the same brush as they now tar IAMGOLD. So this has caused a lot of nervousness, and a lot of questions we've had today have been, are you on schedule? Are you on budget? Are you okay with estimates that you've put out where we've said we'll be up and running by the first half of 2024, and we're going to hit our construction budget of $1.23 billion US. And our answer to that is yes and yes. At this moment, we're on schedule, we're on target, and we expect, for all sorts of detailed reasons that maybe we can go to if there's questions here, and I'll get Doug to answer these, or Christian, we are expecting this project to be a successful project. Currently tracked, we've got about 20% complete. We are tracking on schedule and on budget. And we hope that we'll have the same great record we've had at the other 3 mines we built from scratch in the last 3 years, where we will be able to say that when we complete construction in early 2024. So, growth. What are we about? We're a value stock right now. We're a growth stock. Where are we in our current kind of growth platform? Well, we've had to grow through M&A until now because you can't grow from nothing into a large mid-tier stock without doing M&A if you want to do it quickly. So we've done that. But what we have now, in-house, in assets we already own, is we have these 5 big internal growth projects that will take our production up by another approximately 600,000 ounces. What are they? Well, there's Santa Luz, that's going to be ramping up to full capacity. It'll be running at 100,000 ounces a year from sort of 2023 on, and that'll add another 30 off of this year's guidance of 70,000 ounces. The big one, of course, is Greenstone. Greenstone is going to add about 240,000 ounces to our production base at a much lower cash cost. So the other thing that happens when you build scale is you drop your costs down. You have more ounces more ounces to offset fixed costs, particularly overhead, for example, and these are bigger mines. They should have a much lower cost profile that will drive Equinox into a very large earning, cash flow generating business, ultimately dividend producing business in a few years. Beyond Greenstone, we have a lot of growth coming also at Los Filos. When we're satisfied about the social stability and peace there, and the fact that the communities are all on the same page as we are with respect to increasing that mine, making it a longer life mine, creating wealth for a lot of people in the local community over the long term, we're going to add about 50,000 ounces simply by going into higher grade areas in the next year or two. That's programmed in the current mine plan. And then we're hoping to build a carbon in leach plant which will allow us to increase recoveries and add about another 75,000 ounces of incremental production from Los Filos. We're not going to do that until Greenstone is complete, but we think it will be a very relatively cost-efficient way to boost our production, decrease our costs, and make Los Filos into the mine that we really saw it could be when we acquired Leagold. And then at Castle Mountain, we produce currently about 20 to 30,000 ounces a year from the small-scale heap leach operation, but we're permitting now. We just submitted our permits at the end of March to go up another 180,000 ounces to make this about a 200 and some thousand ounce a year mine for about a 16-year mine life on current reserves. It's a brownfield development. This was an existing operating mine during the 90s and early 2000s. And we think it should generate a lot of value for communities, for governments in California, and of course for our shareholders, and yet be done in a way that's as environmentally sensitive as possible. So that, when we get the permits for that expansion, it'll take another year or two to build. We'll do that again after Castle Mountain's finished. So we'll be looking at new production coming from Castle Mountain, assuming we have a 2-year or so permitting window, sometime in 2025, 2026. But that's going to sequence very well with Greenstone and then Los Filos and then Castle Mountain. And then we have a very cool growth project in Brazil at the Aurizona mine, where underneath the open pit we have a large slice of gold mineralized material, which is you're going to see some results from that fairly shortly, and that should add, when we can combine that with open pit production, we should add about 30,000 ounces a year from the underground. I personally think it's going to be more than that, but that's kind of what we're showing right now. So all those are internal growth. We're fully financed for these projects. We should have one coming after the other, and when we have them all done, we're going to add about 600,000 ounces if we do nothing else. And so that's why we say confidently we should have gold production over 1 million ounces in the relatively near future. And that's always been our strategy. 1 million ounces isn't anything particular, it's just a number, but it represents scale. And scale counts. And scale counts for the reason shown on the right-hand side of that 8th slide there. You get a revaluation when you have scale. You get a revaluation because you're bigger, you're stronger, you're more diversified, and you should have much higher cash flows than we have right now as you get more scale for reasons I've already mentioned. So, the multiple we have today of maybe 0.6 or 0.7 should go up above 1 if we're going to be comparable to any of the other large producers when we get to that scale. So that's kind of the operational review. I'm going to finish off with 2 things. One, a little talk about what we're doing on the responsible and ethical mining side, and then finish off with a few words about gold. This is something that, the ESG stuff, it's just so very important today for every company, every mining company, every company, period. what do? You look after your environment as best you can. You look after your employees. You try to have them safe, go home every day safely, and not end up in the hospital. No fatalities. We absolutely have to work on our greenhouse gas emissions, try to reduce them as much as possible, reduce our energy consumption as much as possible. We have to work with our communities. Our communities support us, and we have to support them. So it's just basic good business to do this kind of stuff. We actually have had a pretty good record everywhere. We're very proud. I mean, we didn't lose any time for COVID, during the COVID pandemic. This is very different than most companies who had to close mines because they were having sick employees. We didn't have any production days lost. We supported community education programs, vaccination programs. Every one of our mines tested. We had doctors, nurses available, and it really showed in results. And then today, we published our 2021 Environmental Governance and Social Report, which you can now read at our portal, ESG portal, at our website. Please read it. Look at our governance. Look at the attention we spend on human rights. Look at our achievements. Don't just look at our words. Look at what we've done. This is what I'm proud of. This is the focus of every single one of our senior management team around this table and beyond. And they're engaging the whole company to look after our employees, look after our communities, look after the environment as best we can. Employ good human rights policies, good grievance policies, across the board. Diversity, inclusion, all that stuff. It's really important stuff, and I'm just so proud of our team for having focused on this so much. And again, we walk the talk. You're going to see those results in our report. Please have a look at it. It's good stuff. I really recommend it to you all. Okay, I'm going to end on, and then I'll open it to questions. I'm going to end on a couple of slides on gold. This is our business. We exist to give investors leverage to gold prices. Leverage immediately with a large production base, so that if gold goes up $100 and we're producing, 700,000 ounces a year, for example, we're going to have increased income of $70 million. It's just a straight line. And then also on the capital side, on our basic assets, our reserves and resources. If we have 30 million ounces of reserves and resources and the gold price goes up $100, bingo, that's a very, very significant bit of capital leverage for every single owner of this company. And that's why we exist. I don't think we would have started Equinox Gold 4 years ago had we been bearish on the gold price. I mean, why would you build a gold company in that market? But we weren't. We were very bullish. Gold was trading for about $1,350 in early 2018, and I think we definitely got that side right. All of the macro environments why gold should perform well right now, they're actually happening, and gold has responded. I confess to being disappointed that it hasn't responded as well as I expected it would. I thought gold would blow through $2,000 an ounce, but it hasn't. It's been pushing it, a couple of times last year. Early this year, it nudged $2,000 an ounce, but it's still not done as well as I thought it would, given all of these incredibly bullish macro fundamentals on the demand side. I'm going to talk about demand because most people focus on demand, and then I'm going to talk about supply because very few investors think about gold supply as a bullish factor, but it is. Well, if you look on the demand side, I mean, how could you have a more bullish fundamental picture for gold than we have today? You have global geopolitical crises. You've had an absolute binge of government spending and government debasing of currencies, not just due to COVID. It happened before COVID. COVID just added fuel to the fire. You've had this explosion in sovereign debt, and it surely didn't take a rocket scientist to expect you would have an inflationary outcome from all that and a rise in the gold price. Well, both of them happened. Inflation is here. Inflation is here, and it's going to be here for quite a while. I just don't see that the Fed or any central bank has any ability to really stem inflation significantly. In fact, they actually benefit from inflation because it reduces their debt to GDP ratio. It's one of the solutions governments have to get out of debt. But, they talk the talk. Powell has been talking about more rate increases. And that scares people into thinking, he's actually going to do something to reduce the liquidity that has been injected into global markets and reduce inflationary impact. I don't think it's going to happen. I just don't think it's going to happen. I think even if he increases rates the way he says he's going to do, you're still going to have net negative real rates. And so why would anybody buy bonds in that environment? In terms of macro markets or stock markets, I think you're going to have a significantly reduced froth in major markets like we've had in the last few years. Why would anybody buy gold when major markets are going up 20% a year? That party's over. I think the crypto party has waned. Certainly, cryptos have a place. They're a form of a store of value in a certain sense. I'm not dissing the value of crypto in certain instances, but I don't think this mania of cryptos replacing gold is a logical story. We've seen the meme stocks, the technology stocks, all the FANG stocks, they've all weakened. Well, they were overpriced. And I think in that environment, or in this environment we see ourselves in today, gold becomes a significantly interesting alternative asset that people ought to look at. Generally speaking, on a 50-year trend, investors, institutional investors particularly, are underweight gold. A little bit of money going into gold is going to make a big difference on the price, and it's also going to protect them from weakness in other major markets. Lots of people are buying gold. Central banks are buying gold. The U.S. Mint had our second record year last year of gold investors buying coins. China's consumed a huge amount of gold recently. India imported a record amount of gold in 2021. And, of course, gold ETFs added a lot of gold last year. That's one of the reasons why gold has been strong. So I think that all of these reasons are reasons that should compel gold as being a continuing store of value. I don't see it underperforming. I see it outperforming in the balance of 2022 and beyond. And I think currently its last week or two of correction is going to be fairly quickly corrected again or recorrected. Gold will continue to go up in price as people realize that the Fed hasn't got a lot of option and is not likely to throw the market into recession as it increases rates, if it increases rates too much. And as soon as the market realizes rates won't be increased, either the dollar will weaken or people will just go back into gold as a good, safe place to hold value, as a store of value. And then on the supply side, on page 11, you've had a lot of, and this is really across the board for the whole mining industry. Not just have you had a lot of noise in Russian gold production and Russian mine production from the war and from people sanctioning Russia, but the fact is that today gold mines are harder to find. They're lower grade typically. There are more difficult places to mine, and they take longer to go into production. So gold is relatively inelastic in terms of the supply response to higher prices. Price goes up, you're just not going to see a supply reaction for 5 or 10 or even 15 years, simply because of the long time it takes to discover, develop, and build mines, get social license, political license, and so on. And that's one of the reasons the total gold supply has been flat since 2014. So the supply side's bullish, the demand side's bullish. I'm very optimistic that in the next year or so we're going to have continuing strong gold markets, and in that environment, Equinox Gold should be looked at as a core investment for any gold-interested investor. We have diversity, scale, increasing gold production, solid balance sheet. We don't need to do any more equity issues. We can finance everything we've got with our own cash flow and capital resources. And once we hit that 1 million ounce of production, we're going to click our heels and say, temporarily, mission accomplished. There won't be any more M&A until we get there, as far as I expect. And that's the story. We're all pretty proud of what we've built. Again, I am very happy to deliver this report to our shareholders. This is only the 4th time we've done this since we started, and it's my joy and my appreciation to the whole team for getting us to where we've got to, which, as you can imagine, is a huge amount of work and requires a lot of talent. is only modified a little bit by the sort of knee-jerk reaction that investors place occasionally on quarterly results. So it's my little rant today that please look beyond our first quarter results to the big picture, look at the forest, not the trees, and if you look at that, you're going to see a fabulous company, well-managed, well-financed, tons of growth, in great shape, that's come out of nowhere, and in just 4 years has built itself into one of the world's great gold companies. More to come. With that, I think I'll close and open it to questions.
Sure, we've only got one question so far, so I'll remind listeners, if you do want to ask a question, you'll see a Q&A tab on your screen. If you click on that, it will open up a text box, so you can type your question in there. It will come to me, and I will read it out to Rob. So the only question we've got so far is that it was, as you've alluded to, rather rough day on the market today. What sort of catalyst can shareholders look forward to in the upcoming months that will hopefully support the share price?
Christian.
Yeah, it's Christian here. I'll take that. We have a period here where we're focused on execution, and it may seem a little bit boring at times, but what we really want to do is continue to show the delivery of our plans. And again, as Ross said, it's over multiple quarters, not just one quarter. So in the near term, they'll be hitting sort of its stride in Santa Luz and hitting commercial production in the next sort of quarter or so. On the back of that, we're going into the summer season at Greenstone, so there's going to be a heck of a lot of work going on there with the snow gone now and the team ready and ramped up. So you're going to see lots of photos, lots of equipment arriving, buildings going up, de-risking that project in a major way this year. And we hope to get investors and analysts to site, call it early in the fall in September, and to see all that work for the first time ever, because during COVID we weren't able to do site visits. So you're going to see regular updates on that. You're going to see gradually increasing production and reducing costs over the year, which will show very heavy cash flow orientation to the second half, as Ross said, 85%, and costs coming down, below $1,300 is the plan. And also there will be periodic drill results as we continue to drill, and mostly in areas that are prospective or shorter life mines. That'll continue to happen. We also have continuing focus on studies and work at sites that have expansion projects that are a little bit further behind Greenstone. So Aurizona Underground, if we get access to a portal there late this year, next year, we'll be able to start going underground and providing updates on that. Permitting at Castle Mountain might take 2 years plus, but obviously any updates on that we'll be able to provide. And you'll just see the production base start to stabilize as Santa Luz comes up. The mines that were expected to have a weaker Q1 start to stabilize, call it in Q2 and Q3 here. And so there's a lot on the go still this year, despite it being more internally focused. And we'll continue to basically germinate and look after our investment portfolio and any other small assets that we have in our portfolio to surface value, like we've done very successfully with Solaris and IAD in the past.
Perfect, thank you. There are no further questions, so I'll turn it to you for closing remarks if you have any.
I have none. I think I've said everything. Thank you all very much for joining us today, and I look forward to speaking to you again 1 year from now.
Perfect. Thank you. Operator, you can now conclude the call.
Thank you. This concludes the meeting. You may now disconnect and have a pleasant day.